The next evolution in crypto is almost upon us. There's a lot of noise in the crypto space on this topic, but one thing that is clear, the merge from Ethereum Proof of Work to Ethereum 2.0 is without a doubt the most highly anticipated event in digital assets history. The stakes have never been higher for Vitalik in the gang, and we know if Ethereum is ever going to flip Bitcoin, considering how long the merge has been delayed, this transition has to go perfect. Vitalik even said himself, if Ethereum fails to scale, then Ethereum definitely failed. It's as simple as this. All the cards are on the table and all the chips are in the middle. The next few months will be not just pivotal for Ethereum, but for the future of crypto finance altogether. Are we watching a changing of the guard in real time? Or will Bitcoin stand at the top of the mountain forever? May the best coin win. Let's get it. In this video, we're going to talk about the merge to ETH 2.0, when it's supposed to happen, how it could propel the price of ETH into the stratosphere. Now, before I get into my prediction for Ethereum, I need to cover some recent news surrounding the merge as a signal to me that the hype is real. If you don't know, if you're new to crypto, the merge is essentially the process in which Ethereum switching over from a proof of work consensus mechanism to proof of stake. If you don't know what that means, be sure to watch this video on the merge we did last month. You can click above. Long story short, the switch to proof of stake is an optimal approach to use much less energy to get much more work done. This transition is not as simple as uploading to your Xbox. It's required years and years of research and testing to get where they are today. Considering the end goal is reducing their carbon consumption by 99.85%, I'd say the effort was worth the time. Right now, with proof of work, ETH can currently only handle 30 transactions per second. Once the mainnet unites with the beacon chain, it will be able to handle 100,000 transactions per second. The whole point of the merge is so Ethereum can attempt to solve the blockchain trilemma. Think of it like a triangle where the three sides are scalability, security, and decentralization. The reason there's so many alts in existence is because most of them have one or two of these aspects down, but lack the third. There are several projects out there trying to be the one that gets all three. But when the merge happens, it will be hard to argue that ETH isn't the complete package. Before the mainnet can merge with the beacon chain, Ethereum must first make sure that it's going to transition seamlessly on their testnets. This gives them ample opportunities to sort out all the bugs when they do it for real. It's going to work perfectly. There are three main testnets they must convert to proof of stake before the merge can take place. Back in June, the merge on the Ropsten testnet took place with minimal hiccups. Just last week, the Sepolia testnet was also converted to proof of stake. Now that those two are finished, once the final trail run on the Gurley testnet is complete, ETH will be ready to commence the long-awaited merge to ETH 2.0. Due to recent changes with the difficulty bomb, basically a code that slows block production and incentivizes miners to abandon proof of work, the merge is now projected take place in September of this year. In anticipation of this historic event, U.Today reports that according to Glassnode, over 13 million Ethereum, more than 10% of the circulating supply, has been locked into the ETH 2.0 staking contract. Very bullish sentiment. I'm not alone in the line of thinking that the merge to ETH 2.0 could be a catalyst for an eventual flippening for the number one crypto. Vivek Raman, a crypto researcher who used to be a Wall Street high-yield bond trader, put out a very interesting series of tweets that illustrates why Ethereum will have the adequate structure to take over Bitcoin once the merge is complete. To summarize, although the gas prices won't come down post-merge, ETH's inflation will drop from 4.3% to 0.22%. This will create a supply shock because of over 14,000 ETH being issued every day. That number will come down to 736 per day. It's a 95% reduction in issuance. Despite the ongoing argument on whether or not ETH will be more secure post-merge, according to Vivek, ETH will have better security under proof of stake because it will cost more to attack them than it would under proof of work. Because of EIP 1559, the improvement proposals that burns gas fees instead of giving them to miners will come a deflationary aspect in play with Ethereum. And even if more ETH is issued than burned, EIP 1559 will also keep inflation very low. Once the merge is complete, ETH's staking yield will increase by 50%, which is why he makes a comparison that if Bitcoin is digital gold, then ETH is a digital bond. We already knew that post-merge, ETH will be more energy efficient than proof of work while using 99% less energy. In the same breath, Ryan B.ETH states that it costs $17 billion a year to run the Bitcoin blockchain. This detail alone is the deal breaker for many investors. Vivek wraps up the thread by mentioning the importance of scaling and that there's still more work to be done with sharding, like clients, staking withdrawals, etc. His final tweet reads, "It's worth repeating. The ETH merge is one of the most impressive engineering feats in blockchain history. When you really break down all the points he made and you really look at all the data, unless you're a die-hard Bitcoin toxic maximalist, it's hard to not think that Ethereum will take over eventually. Despite being in a bear market, Ethereum, for the most part, has maintained its monopoly over the NFT space. The anticipation to the merge has been growing for years. If they pull it off this year, like they say they're going to, the next bull run is going to be astronomical for ETH holders, especially if we've been here since the beginning." Think about this fact Forbes recently pointed out. Ethereum's price has soared 648% in the past 3 years, more than double the 250% gains in Bitcoin in the same period. The next 3 to 5 years, considering ETH is going to be much more scalable while using way less energy, there isn't any way I see this trend reversing. If ETH outperformed Bitcoin without proof of stake, imagine what it's going to do when it basically goes through a triple halving. Considering Bitcoin will eclipse gold's $10 trillion market cap, eventually it's not hard to see Ethereum rivaling the market cap for derivatives, which is in the hundreds of trillions, no, actually the quadrillions of dollars. But that's a few cycles from now. Today we're still in the bear market, and that's a perfect time to get a Ledger Cold Wallet. I'm going to link down in the description for you guys. This will help you accumulate more Ethereum and other coins safely and not on an exchange, not your keys, not your crypto. We have to prepare for this next bull run while we still can. It's only a matter of time. If you thought the last bull run exceeded expectations, can't wait to see your melted faces the next time ETH reaches all-time highs. That's all I got. Be blessed. BitBoy out.